Fabulous to be here, Mr. Sinha. Thank you so much. I would love to talk about sustainability in capital markets, obviously, and I've myself spent 2.5 decades helping companies and investors translate their climate ambition into climate action. With that lens, I'd like to focus on 5 key themes today that are top of the mind for both Indian and global stakeholders. So, talking about Indian economy in the global context, over the last few years, India has held its own in a turbulent global environment, from a geopolitical realignment to bouts of risk-off kind of sentiment, while domestically pursuing growth-oriented budgets, infrastructure, manufacturing, and a stronger sustainability push. India is, in fact, amongst the first countries to do so. So from your vantage point, how do you see the Indian economy shaping up over the next few years in this complex global backdrop? And what are the key signals you would urge global investors to watch out for when they assess whether India is truly on a sustainable and high growth path?
Thank you very much, and it is a real pleasure to be back here at the IVCA conclave. And once again, along with Anant, let me thank all of you for the wonderful work that all of you are doing to drive India's growth and to drive investment in India. And in fact, it is because of all this exemplary work that regulators like Anant have done and investors like you all have done, that the Indian economy actually is in what a lot of people have correctly called a Goldilocks phase, a sweet spot in terms of growth, inflation, current account deficit, and investment rates as well. And of course, Anant was exactly right to say that there's not enough paper coming. In fact, capital formation has happened really, really well. We now need to do more on the company formation side so that we have a good balance between demand and supply. Now, I will recognize, and all of you recognize, that we are going through a very turbulent period right now because of the war in the Middle East. And that, of course, has meant that all that we were expecting in terms of just unconstrained growth for India is now in a very volatile phase. But we are all hopeful, and that's actually what the forward markets and other analysts are saying in terms of what will happen, which is things will settle down. If things do settle down, as I said, for India, the growth prospects are outstanding. One of the very important things that has just happened is that we've demonstrated over the last 3 or 4 years that rather than having a growth rate of about 5 to 6%, which is what we have been demonstrating over the last 5 or 6 or 7 years, taking COVID out of the picture for a moment, is that we have now accelerated. The Indian economy is actually accelerated, and our GDP growth rate is now 7% plus. Now, as a $4 trillion economy growing at 7% real, probably 10 to 12% nominal, we have incredible investment and return prospects ahead of us. So as a result of that, I think, as I said earlier, we are in a sweet spot. The economy is going to do extremely well. There will be tremendous wealth creation and tremendous opportunity for the folks in the room here to generate really, really good returns and help India accelerate even further.
Could we also touch upon attraction of capital towards sustainable and green growth? Where do you see that going?
So I think for us to undertake the green transformation, which is to go to an electrified economy, to go to a net zero transition, we are going to need trillions of dollars. So Niti Aayog has just done a landmark report, excuse me, where they have looked at the difference between following a net zero trajectory versus following a business as usual scenario. And what they found is that the investment delta is $8 trillion over the next 45 years. But what that translates to is immediately $100 to $200 billion additional of investment right now. Now, let's recognize that today total corporate capex in India is only $100 billion. So for us to pursue a meaningful net zero trajectory, we have to double corporate investment. Now, that's on the green transformation side. At the same time, another very unprecedented set of changes is happening in the global economy, and that, of course, is related to AI. Like Anand and many of us, we are spending more and more time using all of these AI models, and we are recognizing that we are at the brink of a very profound transformation in the economy. That transformation also requires massive, massive investments. Already about $75 billion worth of investments have been announced by various players at the AI Impact Summit. So while we have to do hundreds of billions of dollars more because of what we have to do to electrify our economy and move to net zero, equally, for us to remain competitive as an economy on the AI side, we are going to have to invest hundreds of billions of dollars more. So you have a lot of work ahead of you. You have a lot of work to do to be able to find those companies, put those investments to work, recycle the capital, and keep on getting those billions and billions of dollars moving in the economy. So, as I said, both sustainability and technology, and I'm using the term, by the way, which some of you may have heard before, the green frontier. I'm calling it the green frontier. Because what I'm saying is that not only do we have to get to the frontier in terms of competitiveness, technology, productivity, everything that India needs to continue to go from being a 4 to a 10 to a $20 trillion economy, at the same time, we have to also ensure sustainability so that our air is clean, we don't end up in a situation where we are warming at 2.5, 3 degrees centigrade, that our forests are protected, our biodiversity is protected. So sustainability is also very important. And I'll just conclude, if you'll excuse me, by putting on my political hat and saying कि आदरणीय प्रधानमंत्री जी ने कहा है कि हमें एक विकसित भारत बनाना है. प्रधानमंत्री जी का कहना है हमें एक विकसित भारत बनाना है. अगर हमें विकसित भारत बनाना है तो हमें एक हरित भारत भी बनाना होगा, एक ग्रीन इंडिया भी बनाना होगा. दोनों एक सिक्के के दो पहलू हैं, विकास और हरित भारत.
Absolutely well said, Mr. Sinha. Thank you. And I would love to deep dive into AI and technology. But before that, I mean, as you rightly said, we will have to do a massive reallocation of capital into renewables, hard-to-abate sectors, and climate-resilient infrastructure. Yet many stakeholders still worry about the scale and speed of mobilization. So how effectively are we really attracting global and domestic capital into India's green transition? And what are those top 2 or 3 policies or market interventions do you believe would be catalytic in this transformation?
So we are doing a reasonable job. Obviously, as you know, we had a target of 500 gigawatts, for example, for utility scale solar. We also have a target for solar rooftops. And in many of those areas, we are actually ahead of what we said we would do. However, I'll give you just one example. At Eversource, we are investors and we own a company called GreenCell. So GreenCell is the largest operator of electric buses in India. Just so you understand the scale of the challenge, we've already, won bids for about 4,000, 5,000 buses for GreenCell. And we've pumped quite a bit of capital to be able to acquire and operate these buses. But India has 2.5 million buses, 25 lakh buses that are all running on diesel right now. If we have to electrify them, clean up our air, make sure that you can deliver a more affordable ride in terms of rupees per passenger kilometer, because that's what electric buses can do. We have to invest, according to the World Bank, $400 billion in buses alone. So even as we are expanding GreenCell and deploying hundreds of millions of dollars in capital, in buses alone, billions and billions of dollars are required. Similarly in trucks, similarly in cars, similarly in two-wheelers, three-wheelers, and on and on and on. So we have to mobilize large-scale capital for the green transformation. Now, what do we need to do to accelerate that? Again, Niti Aayog has laid out a number of different very good policy suggestions. Let me highlight 3 that I think are very important. Number 1, we need a green financing institution that is able to blend together concessional and commercial capital and scale that up so that we can deploy more capital. So number 1, green finance institution. Number 2, we have to ensure that the multilateral development banks and various other sources of capital bring to India the necessary capital that we need to scale this up, and that is also extremely important. MDBs are doing a good job, like the IFC and so on, but they have to use the balance sheet and scale this up tremendously. The Green Finance Institution can help there. So number 1, India needs its own Green Finance Institution. Number 2, the MDBs have to step up. And number 3, Step by step, we have to go through and identify where are the policy bottlenecks. If we have to convert all our trucks from diesel into electric, what do we need to do? If we have to convert all of our buses into electric, what do we need to do from a policy point of view? So all three have to work together, whether it is the Green Finance Institution, MDBs and DFIs, both domestic and global, and of course policymakers, to ensure that this large-scale flow of capital happens. The good news, as you know, my big headline is net zero is net positive. Net zero is net positive, and it's very self-evident, because if we pour this kind of capital into the Indian economy, increase our investment rates, not only are we going to create more jobs, we're going to have more investment, we're going to have more company formation, we're also going to clean up our air and make a climate that we can all appreciate and value.
Lovely. So, Mr. Sinha, whenever we speak to CXOs and board level partners, we see that their sustainability priorities are mostly driven by the priorities they hear from LPs and investors. And from your perspective, what are those key areas that investors are looking into, and what are the biggest gaps that these companies and funds in India can address to become investable in the next 3 to 5 years?
So we move beyond this ESG thinking. So that is very I think out of date now, because the green transformation is not about ESG. The green transformation is something very simple. It's about profits and returns. And that's why I say profits trump politics. Profits trump politics, because if you're making money and you're generating the returns that investors are looking for, then the capital will flow and we can undertake the green transformation. If you start to think of it as a cost item, as an add-on to what you're doing on a day-to-day basis, that's not going to work. So we have to find companies like a Green Cell, like an Ayana, like a Lithium, which are all our portfolio companies, where sustainability is their business model. Sustainability is their business model, so when we scale them, we ensure sustainability for India, and that can only happen if we are able to generate the profits and the returns. There is infinite capital available on the planet. If you can deliver, let's say for infrastructure, net 12 to 15% dollar returns or hard currency returns, if you can generate those kinds of returns, there's plenty of capital available. But those are the returns that we have to generate. We have to get cash back to our investors, so then they can recycle, and that's really how this whole virtuous cycle can work. So we have to be focused on returns, we have to be focused on DPI, we have to be focused on profits. That's the only way we can make this happen.
Coming to AI, data centers, and the green energy challenge linked with that, we are now seeing a powerful intersection of digital and climate, with AI and cloud driving an explosion in data center capacity. Now, this is of course strategically vital, but also hugely energy intensive. That raises questions from clients about how to keep this aligned with their net zero goals. So from a policy and infrastructure standpoint, how should India approach this surge in AI-driven data center growth? How do we genuinely keep it green and sustainable?
So what's happening in the Middle East should tell us very clearly that we need to have energy security, that we need to be self-sufficient as far as energy is concerned. Let me tell you a little bit about what China has done. As you know, China is the world leader when it comes to green technologies. So the entire value chain is something that they have really gotten to be the best in the world on. Starting from mining critical minerals, refining, extraction, to actually then building the cells for whether it's batteries or for solar panels, then turning towards nuclear technology of various kinds. In every possible way, China has built its energy self-sufficiency and driven down the cost of energy. You may also be interested in knowing that today, if you look at the strategic petroleum reserve, China has a strategic petroleum reserve of 200 days. That's what China has done to ensure energy self-sufficiency. Of course, they have coal as well, but they are using coal more as a baseload filler than really trying to grow it that way. They are adding some coal, but fundamentally, they're looking to add clean energy through renewables and through nuclear. This is the kind of energy self-sufficiency that China has built. And because they have this energy self-sufficiency, they can actually build out their AI data centers and their AI compute infrastructure as well. And so today, what is happening is that energy and compute are fusing into one strategic national platform. We have to fuse together energy and compute because compute, as we know, is very energy intensive. If your compute, your cost per token is too high, you're not going to be able to process AI models in India. And even our application services will become quite expensive. So it's extraordinarily important that we fuse together energy and we fuse together compute and we enable both of those to grow very, very fast. And of course, that's going to require massive investments. As I said earlier, hundreds of billions of dollars of investments are required so that when it comes to India getting to the green frontier, getting to the absolute, sort of advanced competitiveness that we need to be a 10, 20, 30 trillion dollar economy, we have to be able to put energy and compute together. And China has shown us how to do that. By the way, the Americans are also doing that, of course, but the way President Trump is doing it, his energy dominance strategy is not green, it's brown. So he's really saying, let's get more shale oil, let's get more natural gas, let's get more fossil fuels, actually driving our compute infrastructure. And as you know, GE and Siemens are out of gas turbine capacity till 2030 because they are really driving their data centers using gas turbines.
So while AI will consume significant energy, it can also be a powerful enabler of sustainability, as we all agree, from optimizing power grids, industrial processes, to improving climate modeling, agriculture, resource efficiency, which are all highly relevant in the Indian market. How do you see India leveraging AI as a tool to accelerate its sustainability agenda? And in your view, are we moving fast enough?
We have no choice but to move even faster. And actually, this is a question I would have for Anant and other regulators or former regulators, which is, we've done a lot. We've done a tremendous amount over the last decade, and I'm very proud to have been part of that. But now as I look around myself and I see what people have done around the world, they have moved as fast, if not faster. So we need a leapfrog moment. We need a leapfrog moment. And so we have to look at our regulations, we have to look at our policies, and I'm very happy that in Delhi much of it is being done. But if we have to catch up with the rest of the world and in fact get to being more competitive, we have to leapfrog across every dimension. Whether it's regulation, whether it's investments, whether it's technology, whether it's our universities, whether it's our institutions, unless we leapfrog at this very crucial juncture of economic history, I am very worried that we are going to get left behind. Because the thing with AI is that it is recursive. Part of the reason why Anthropic has gotten ahead in some ways of ChatGPT is because Anthropic is using Claude to program Claude. So that recursive nature of AI, where AI enters into this feedback loop, where it gets better and better and better, is going to play out across the economy as well. So we have to really leapfrog at this point, because if we have to be able to compete with the US and China, who are our peer competitors right now, because we're not competing with middle powers, we are competing with the superpowers. And that is what we should aspire to as a country. In that case, we have to leapfrog on all dimensions. And it is AI, as you were asking, it is AI that will enable this leapfrog. But for our AI to enable this leapfrog, we have to make sure that our institutions are sufficiently dynamic. Let me give you a specific example which I have worked on in great detail, which is around ex-ante regulation. So when I chaired the Finance Committee in Parliament, we wrote an entire law which was the digital competition law, where we introduced a new paradigm for competition, which is ex-ante regulation, not ex-post regulation. And the reason we did that, the reason, ladies and gentlemen, that we introduced this new paradigm of ex-ante competition regulation is because digital markets tip very quickly. And if you wait 5 or 10 years to do ex-post remedies, markets have already tipped, the facts are on the ground, and you have no choice but to accept whatever is out there. So rather than getting into these de facto solutions, we have to find a way in which we can prevent tying, which we can prevent preferring your own applications, and on and on and on. And by the way, And I have an article that's just coming out on Business Standard. But if we continue to pursue an application-first strategy only, it's a great way to get started as far as AI is concerned. But ultimately, India has to build its own frontier models. Otherwise, markets will tip. G2 will come about, a duopoly between the US and China, and they will create so much economic strength and so much economic leverage, it will be very difficult for us at this leapfrog moment to be able to compete as an economy against the two of them. And so we have to, and this is back, my final point is to you all and to us, that we have to be willing to take those risks and make those big bets. For example, Sarvam, funded by our VC ecosystem, has got $40 million of funding. If you're following, Mistral, which is an open source frontier model in France, I'm not talking about the Bay Area and I'm not talking about Shanghai. Mistral has got $2 billion of funding. And Jan LeCun's startup has just gotten $1 billion of funding at a valuation of $3.5 billion. So that's the challenge that we are facing in company formation. For us to be able to go out and build frontier models and secure that compute capacity and get the best computer scientists in the world and hire the top JE ranks, we are going to need that kind of capital. Unless we put that kind of capital to work at this leapfrog moment in human development, we might risk falling behind. That's what happened at the Industrial Revolution. That's what happened at the Industrial Revolution. Let it not happen to us when this intelligence revolution happens.
Thank you so much, Mr. Sinha. That has been a very insightful session indeed. And for those of us who are working with companies operationalizing this on ground, this is truly invaluable insight. Thank you. And should we leave some time for questions? Do we have? Yeah, please.
Yes, Rajat is about to choke.
2 questions.
We need the mic, that's all.
Or a loud voice.
Got one.
Thank you. And I have both. I have a loud voice and the mic. My name is Seema Chaudhary. I'm founder and managing partner of AWE Funds. I run into you in Davos and at the airports. Mr. Sinha, the intelligence revolution. We've all just been through the India AI Week Summit. Vinod Khosla says the human race is basically going to be pursuing its passions. I didn't figure that out. I haven't decoded it. How do you see and where do you see the opportunity as AI takes on all the jobs? And I'm actively investing in applied AI myself. Where do you see the intersection and the opportunity for the human race where AI intersects and we are grappling with the aftermath of AI on the planet? Do you see opportunity in the greening of the planet at the intersection of adopting AI, and where is that opportunity?
So I'm a techno-optimist. I'm an engineer by training, as many of you know. I started my professional life writing code. So I'm very much a techno-optimist. I think we are going to expand opportunity for humankind dramatically with AI. It's a tool that we've never seen before. It is an extraordinarily powerful platform for us to use to drive, everything that we can do. It's up to us and it's up to different countries and different industries to reinvent themselves. Because we've seen, particularly look at the Industrial Revolution. In 1750, India was 25% of global GDP. India was 25% of global GDP because it was an agricultural economy by and large everywhere in the world. When the leapfrog happened with the Industrial Revolution, we fell very far behind. Other countries reinvented themselves. There was a little island off the coast of Europe that ended up building an empire on which the sun never set. At its peak, there were never more than 100 to 200,000 Englishmen in India. And they were ruling India of 330 and 350 million people. Why? The answer is technology. So technology gives you enormous capabilities, enormous ways in which you can do things better. That's what we have to do. We as a country have to invent those new ways of doing business, of coming up with new ways of delivering service. Agentic services of all kinds will become very, very important. Those are the kinds of things that we have to develop. Now, to the great credit of India's tech services industry, Manish and I have spent a lot of time working in that industry ourselves. We have done a tremendous job in building up our tech infrastructure and our tech capabilities. Now we have to reorient them towards AI, towards agentic services, and to be able to build frontier models as well. So it's really up to us.
So my name is Mani, I'm from TVS Capital Funds. Most of the people here may not be aware that you were instrumental for the success of FFS 1.0 because you were brought in that venture capital investment committee comprising of external professionals in a government organization. First time in the history of Indian bureaucracy to happen. That is take the roots. The same fashion, if this climate and technology PE funding has to succeed, you will agree that blended finance or the priority distribution model has to be there in place. It is not there. CB's guidelines prohibit priority distribution model. How do we address this challenge? How do people will come where long gestation is required to reap the dividends? Or the private equity investors will come and play and participate in the story?
No, so I think, thank you by the way for your kind words, but the answer is blended finance. You see, there's a huge negative externality because of our carbon emissions. If we could price carbon, it would probably be, there is a range. I mean, right now, if you look at the price of carbon in Europe, it's $80 a ton. Many economists believe that the price of carbon emissions is $200 a ton. Maybe that's what globally should be the tax that we are paying because that's the negative externality associated with carbon. But we can't price that. So instead of having a tax on the demand side, we have to have some kind of subsidy on the supply side. And the most important subsidy that we can have on the supply side is by lowering the cost of capital for climate finance. How do we lower the cost of capital? We lower the cost of capital by having a sliver of concessional capital being able to improve returns for commercial capital. And that's the basic thinking behind blended finance. So what we have to do is we have to create structures by which this concessional capital and this commercial capital can work together so that more large-scale capital can flow into India. As I said, if you could deliver 15% net dollar returns for infrastructure in India, there would be enough capital available. So can we do that? Can we find a way through blended finance to deliver either reduced risk through credit guarantees or currency hedging and so on, or alternatively, improve returns so that we can start to get those kinds of returns on a risk-adjusted basis to global investors and domestic investors. If we can do that, there will be infinite capital and that will drive growth in India.
I agree, sir, but currently CB guidelines prohibit priority distribution model. That's a challenge now. It is not permitted. It is only for government institutions. But if the private sectors have to participate, priority distribution model has to be in place. So CB guidelines prohibit it. No, that has to be addressed. That's my personal question.
No, I'm sorry, I didn't quite understand your question. Why don't we take it offline? And I think that way we can get back on schedule. I can see Rajat is already coming up onto the platform to do the needful.